Good morning. My name is Brooke Celine, and today I will be teaching you a little bit about creating and maintaining a corporate record book for a business. Corporate record book, as a brief introduction, is a notebook or a binder which contains vital records for the business. We typically use a binder as shown in this picture on this slide. Very few businesses bother to keep a corporate record book, and those that do don't really keep them up to date. But this becomes a critical issue when you are audited or if you are ever a subject of litigation. If you're audited by the IRS or by the state or local authorities, they will want to see your record book. And if you do not have one, you could be considered personally liable for the taxes. The same is true in litigation. If an opposing party seeks your corporate record book in discovery and you do not have one, you could be considered personally liable through catchback of not having your record book. Now, the first step in setting up your record book is to include your articles. If you are a corporation, which means that your name would end in Inc. or Incorporated or any of those other similar names, you would file an Articles of Incorporation. Articles of Incorporation are governed in Illinois by 805 ILCS 5/2, which is the formation of corporations. There are 5 things that are essential to include in any Articles of Incorporation, and that is the name of the corporation that you are intending to set up, the purpose of the corporation, which most companies choose to use any legal purpose so that they have some flexibility there, the incorporators and their address. The incorporator is just the individual or company that is establishing the new company. In Illinois, that can be any company or any individual over the age of 18. The class and number of shares, this is where you would see that you are eligible to establish 100 shares of common stock, for example, and any limitations that may exist on the company. Rarely do you see limitations, at least in my experience. Limitations would be things like you're not authorized to establish a series, which for an incorporation is not even necessary because a series would be an LLC. But you would see that limitation in Articles of Organization, which is what we will talk about next. Articles of Organization are used to establish a limited liability company or LLC. Again, these must include the name. They will also include the legal structure, which is going to be either a sole proprietorship or a partnership by default. Sole proprietorship is a single member LLC. A partnership is a multiple member LLC. You will also see the registered agent listed here, which would also be in your Articles of Incorporation, and whether the organization is member or manager managed, which is just, do your members elect a manager or not? The effective date, which unless otherwise named will be the date of filing, and the duration, which is usually perpetual and is perpetual by default. So unless a duration is listed, it will be considered a perpetual organization. Now, the legal structure, as I said, for an LLC is going to default to sole proprietorship or partnership. A lot of companies do not want that. A lot of corporations do not want C Corp status. They want the tax flow through that comes with it, with being an S Corp, in which case you would file a 2553. A 2553 is an IRS document which allows for a corporation to elect to be taxed as an S Corp, which would benefit the company in terms of their tax liability. Things like this should be kept in your record books so that you have them available if you are ever audited or, again, the subject of litigation. The other IRS form you could file is an 8832. 8832s are a little more tricky than S Corp or than a 2553 because not just anyone can file an 8832. Only certain entities are eligible to file 8832s, specifically partnership and limited liability companies, certain foreign companies or U.S.-owned foreign companies, and then certain entities are not ever eligible to file a 8832, such as business entity that is owned by the government or has joint stock company ownership with a federal, state, or Indian tribe statute, and anything that is issued under the Federal Deposit Insurance Act. 8832 is a little broader than a 2553. 8832 allows you to elect to be taxed as a partnership if you are a sole proprietorship. It would allow you to be taxed as a corporation, or it would allow you to be taxed as individual if you so desire, if you are a partnership. Again, most people prefer to be taxed as a corporation because of the tax benefits of not having personal liability for these, but this does give you some freedom with how you elect your taxation as a corporation, and again, should be kept in your record book so that you have all of these filings handy if you ever need them. Now, amendments are amendments to your articles. These need to be kept with your record book because they show what your company is allowed to do. They show if you've had any changes in ownership. They show if you've had a change in name. These are vital for record books because they help keep your corporation, I guess, organized, for lack of a better word. They help show, well, this is what our name changed. And you don't have to do the searching that you would have to do in order to find those documents if you have them in your record book and handy. Amendments are usually filed, as I stated, when you have a name change or when you have a change in ownership. A change in registered agent would also require a filing of an amendment in certain circumstances. And you file an amendment by finding the amendment form on your state Secretary of State website. In Illinois, the statute that governs amendments is 805 ILCS 5/10.5. This is the authority to amend articles of incorporation. Bylaws and operating agreements are essential to any company and must be kept in your record book. Bylaws govern the structure of your company. They state how your initial directors or managers will be elected. They state any rules that are affecting the company, such as that you have to always have your principal place of business at a certain address, when your meetings will be held, and annual meetings are essential, as we will get to in just a few moments. They also state what shareholder actions may be taken if you have multiple levels of stock. How your operating agreements will state what percentage of stock, an operating agreement, which is for an LLC, may state percentages and how if you have this many, for certain matters, you have to have a 2/3 majority instead of a simple majority. And these are essential. Bylaws are for an incorporation. Operating agreements are for an LLC. Again, these are critical that they be in your corporate record book in case of things such as IRS audits or litigation brought against your company, because they help make very clear that your company is not a mere shield. Now, minutes are important. Minutes help show that you are indeed a separate entity. They help prevent piercing of the corporate veil, as I was just discussing with the bylaws. Minutes must be kept on an annual basis. In Illinois, you are required to have both directors and shareholder minutes. Shareholders are the members of a corporation. Directors are the individuals elected during the shareholder meeting. And in LLC, you would see members and possibly managers' minutes. Typically, you would see the election of an officer in your shareholder minutes on a yearly basis. Sometimes that's the same officers, sometimes it's different. It depends on the size of your corporation. Many smaller corporations, such as many are in Illinois, would often see the same directors appointed over and over. Shareholder agreements, such as a buy-sell. The purpose of these agreements are to set out the terms of how your stock will pass through in the future. It will show that under certain circumstances, which will trigger the buy sell, you have the obligation to sell. It will set out what terms that may be, how that sale will transact, or how that sale will be transacted. Is it going to be, well, another shareholder will buy you out, or is the company going to buy that stock? There are many different considerations to ponder. For example, I just dealt with a company who wanted a buy sell because in a lot of buy sells, it is typical to own insurance for each individual member or shareholder. And then the company will use that insurance policy that it holds to buy them out if they ever were to die in a life. So it would be a life insurance policy. Well, this company that I was dealing with, one of the individuals has a illness that prevents them from getting life insurance. So they had to think about a way outside of the box that the company could still come in and buy those shares if he were ever to pass away or divorce or any other condition that would trigger the buy sell that didn't require them to own life insurance. And this is where you would set that up. This is how you think about the future of your company and how you are going to set up your succession plan. And these are essential that they be in the record book, because if something ever were to happen and it's not in the record book, you may not be able to have that future that you envisioned for your company take place the way you wanted it to. State filings. State filings are essential. They need to be kept with your record books so that you can show that you've been abiding by the letter of the law. You have your initial filing, which would be your articles of incorporation or articles of organization. And then each year you have an annual report, which will have an associated fee. Typically, you get a reminder about your annual report about 3 months before your anniversary date. Your annual report is due on your anniversary date or in the month of anniversary. So if, for example, you filed on July 13th, your annual report may be due on July 1st, depending on the state. A lot of states are going more and more to having these done online. Illinois is not one of them. There is actually an additional fee if you decide to file online as opposed to filing the paper copy. But other states prefer that they be done online. So you've got to play around with this a little and figure out what's the best option for you in your state, and then make sure that you keep a copy of that record in your record books so that your record book, again, prevents the piercing of the corporate veil. Licenses. Licenses are used only in certain circumstances. Certain licenses that you may have are plumbing license for your company or an engineering license for your company, even certain attorneys' licenses. Licenses are those held by your business and should be kept in your corporate record book, again, so that you can prevent the piercing of the corporate veil and to help with any succession planning you may have. Because you don't want to get into a circumstance where you have a license and you have to go out of your way to re-get that license when you sell your company or when you have a transition period. For example, I have dealt with a company recently that the son is buying the father out because the father is ready to retire, and they are doing a complete stock transfer as opposed to an asset sale because of a license the company holds that would require them to re-obtain that license from the state if they were to transfer only the assets. By transferring the stock, the company retains its license because that's who was issued the license. And these are things to consider. Since the company is the license holder, make sure you keep that in your record book so that if you ever were to sell or if a succession plan were triggered, you would have a record of that so that you don't have to reobtain licensures. In conclusion, record books are essential for the upkeeping of your company, not because they're essential to your day-to-day operations, but because they're essential for your long-term planning success. They're essential for succession planning. They are essential if you ever were to be sued or audited. You do not want them to pierce the corporate veil and be able to potentially attach personal liability to you as an individual when it could be limited to your company. They are essential for keeping your personal assets separate from any liability you may have as a company. And these are major issues to consider. And often people overlook the importance of a record book and choose to ignore it until it is not necessarily too late, but until they find themselves in one of those situations. till they find themselves the subject of litigation or the subject of an audit. And then they're scrambling to try and remember when they did what. So I highly recommend that you upkeep your record book as annually, as it makes it easier for you in the long run if that were ever to happen. And it is always better to plan for that long-term negative outcome and never face it than to end up facing that negative outcome and scramble to try and put everything together. So this has been a brief overview of corporate record books. And if you have any questions, please contact our office and we would be happy to assist you. Have a nice day.